Hi guys, thanks for coming today. So we're going to talk about PGMs, a little bit different than Noron's deposit. Good presentation though, and that's a great asset. So we've been around as a public company for almost 15 years, and we've been through some pretty rough times. We tried to build a mine in South Africa, a platinum mine, and ended up being very challenging. And the current asset that I'll talk about is a large palladium deposit that we discovered back in 2011. And it kind of represents a fresh start for the company. Just a little bit of disclosure there. So we actually published a full feasibility study on this asset on Tuesday. And that was a 2-year process that cost over $25 million to actually finish. And we did it in partnership with Impala Platinum, who's the third largest producer of platinum and palladium in the world. They're a $6 billion company, and they've been our partner on this project since 2017. It is a palladium dominant deposit, which is very rare for South Africa. Most of these deposits are platinum dominated. And Impala has a very significant option to take control of this project in the next 3 to 4 months, and I'll talk about how that structure works in a second. Another interesting thing we're into actually is everyone's been talking about how the PGM metals are dead and how batteries are going to dominate the car industry, and they've actually been pretty wrong since the last 5 or 10 years, but it certainly had a negative impact on platinum and palladium prices for a while. But we thought, okay, let's think about research that's going into batteries, and is there anything out there that actually involves PGMs? And we found some interesting research at a number of universities, and we formed a new company called Lion Battery. And it's actually, we were able to convince Anglo Platinum to co-fund this project with us. It's a tiny part of our business, and I'm actually not going to talk about it today, but we're looking at about a $5 million investment in a vehicle that's doing research with PGMs in the cathode of lithium air, lithium sulfur batteries. So if anyone's interested in that story, I can talk about it afterwards one-on-one. So the Bushveld complex in South Africa, this is most of you that have studied geology or have followed these metals will know that this is really the heart of the PGM business. We're on what's called the North Limb, which is a relatively brand new area for PGMs. Anglo has their most profitable mine, Mogalakwena, which is the only open pit platinum mine in the world. And then Robert Friedland's developing the Ivanhoe Platreef project just to the south of there. So we're up here in the red. We discovered it in 2011 just from basic principles, drilling, geophysical work, and we brought in the Japanese government as the first partner to fund the first $5 million of exploration. So fast forward to 2017, and now we're on the cusp of a construction decision in 2020. Why is this asset different, and why are people interested in it? Why is Impala interested in it? Again, if you think about the traditional platinum mines in South Africa, you'll think about Rustenburg, you'll think about the Merensky Reef, you'll think about 1 to 2 meters thick, you'll think about 50,000 people underground mining by hand, essentially. This is a deposit that is basically between 40 and 100 meters in thickness. It's shallow. It starts mining below, underneath 100 meters from surface. It's palladium dominant. Again, 63% palladium, given the current market in palladium, quite an interesting asset. And there's very little chrome in the deposit, so it's very amenable to the smelting and refining operations in South Africa. So it's very much a unique asset relative to a lot of the existing operating mines. The partners, I talked about Impala briefly. So in 2017, they purchased 15% of the project for $30 million, and they bought points from ourselves and from the Japanese government. And I'll talk about their option to take control of this in a few minutes. Jogmec was the original investor with us, and they recently sold down a bit of their position to Hanwha, which is a trading house in Japan. And the thing that the Japanese really wanted and what they got was 100% of the metal marketing rights for the project life of mine. So when the project does go into development and it starts producing, all of the metal will be purchased and taken back to Japan at market prices by Hanwha, which was a big deal for them and quite a success story for Jogmec. And then the last investor is actually in our public company. a South African group called Hoskin Consolidated. They now control, actually the number is now about 32% of our public equity, and their CEO is on our board. And HCI is it's a majority black-owned company that actually has businesses and money in South Africa. And they own hotel chains, coal mines, transport companies, and they've looked at this and from a deep value perspective really like the return potential on the project. Palladium, most of you are probably aware of the palladium price. It's been a bit of a secret story out there. A lot of investors don't really know what palladium has been doing. It's now trading over $1,600 an ounce. We've seen incredible uptake of the metal since the VW scandal and the collapse of the diesel market in Europe. That market share actually didn't go to the battery market. It went to the gasoline market, and all of those gasoline cars have palladium-based catalytic converters. So you can see the real lift-off there and after the VW scandal. And we think that the hybrid market will actually continue to create demand for palladium. And the battery market, I think, is still a big question mark. And we think that there's still a long life left for the internal combustion engine, and PGMs play a significant role in that technology. And we've also seen emission standards really tighten up since VW. So the amount of metal that's going into these cars, both in China and Europe, and the testing regimen has become very stringent. So the last thing that people want to do is mess around with the converters. There is some discussion about switching to platinum, and we are seeing that happening a bit. But the certification process and the change in that chemistry is a multi-year process, and we'll watch how that's playing out. So the commodity price for our particular project, which is a palladium-dominant project, has really taken off since 2016. So the pre-feasibility study was done at $966 an ounce, and the current basket for our production is almost at $1,500. So the feasibility study that we just put out really benefited from that commodity price explosion. And actually, if you look at the South African rand-denominated basket price of metals, it's actually trading at an all-time high. So the South African platinum companies are making an absolute bucket load of money right now. And Impala, our partner, is in a very good position now to fund the development of this project. So I'm just going to pull out about 10 or 12 features from this feasibility study. I'm not going to go through the whole thing. The full report will be on CDAR in a few weeks. It's about 600 pages for anyone that's actually has the patience to read technical disclosure. So Stantec and DRA were the consultants on the project. We insisted on having a non-South African engineering firm do the mining design because the South Africans don't know how to bulk mine underground. So this is probably one of the biggest risks to the project, is the training and the labor around long hole mining. The reserves are just under 20 million ounces, proven and probable. The nameplate production is 420,000 ounces a year, steady state, and that's 63% palladium of those 420,000 ounces. And the mine site cash cost is at $640 versus that $1,400 basket price I just showed you. The NPV, it's funny, I was watching the Noron presentation, I saw you guys also use an 8% discount. We're using 8% because we're South Africa, so I guess it's a different rationale, but so it's $1 billion project. The peak funding is just over $600 million, which gives you a 20% plus IRR. We're pretty comfortable with the fact that this meets all of the hurdle rates that Impala would have internally, and they've made a lot of positive comments to us about the outcome of this study. There's also a significant amount of nickel and copper production that comes with it. It's a 45-year mine life based on existing reserves. So there's a ton of inferred resources in there that have not been put into the mine plan. And I can tell you right now that if this thing gets developed, there's a good chance it could mine for 100 years. That's how big it is. Recovery rates are very standard with South African PGM deposits. And the one thing we don't have yet, which I think is critical to the execution of this project, we don't have a mining license, and we expect to get that in the first quarter of next year. So somewhere in the March period, we're expecting the government to grant our license, and the first production first ore essentially would be 2023 if we started building in mid next year. So to the ownership structure very quickly, this is the current ownership structure. We're 50% ownership along with our Black Empowerment partner, which we also own a portion of. Impala's at 15, Hanwha's at 9.7, and Jogmec's still at just over 12% interest. So here's the option, and this is kind of what everything's hanging off of for us as a company. When Impala made their $30 million purchase of 15%, they acquired a control option. So the feasibility study was announced on Tuesday. There's a short period for approval internally of that study, and then after the study is approved, there's 90 days for Impala, 90 business days for Impala to exercise this option. And they have to do two things, and they have to do them at the same time. So the first thing they do is they buy out the Japanese for $35 million, and Jogmec exits the project. Then they have to invest $130 million on the first phase of construction of the mine. And those two things together gets them a 50.01% interest, a controlling position in the joint venture, and we dilute down to just under 32% overall interest in the project. So this decision is now coming down the pipe, and we expect it to occur once around the same time that our mining license gets approved and this option is exercised by Impala. There's no guarantee they're going to do it, but given the amount of time and resources and energy that they've spent on the feasibility study, and the fact that they're mining assets that are in fact dwindling and being put into care and maintenance, this is a pretty important project for them. A very quick timeline. Again, the steady state number is 2027, assuming that we're starting somewhere in the 2020 period in terms of early construction. I talked a little bit about the reserves and resources. This just gives you a breakdown. So the first pie, or the first graph over there, is measured and indicated. So it's 242 million tons, which gives you 26 million ounces. The red pile of concentrate over there represents palladium, 16 million ounces. The reserves are 187 million tons with just under 20 million ounces. And you can see the prill split with the dominance of palladium. This just gives you a sense of what this production profile looks like. 420,000 ounces a year, mining till 2066. And the big purple-blue section in the middle would be all of the palladium production that comes. And as I said earlier, there's a lot of ounces here that I didn't even show the inferred ounces, but there's a lot more potential here after 2066. Cash flow, standard cash flow curve from the feasibility study. Again, undiscounted, over $6 billion of cash flow after tax. So again, if you can get this project built, spend the roughly $800 million to build it, and the capital's in the ground, the return on this project over those 50 or 80 years is quite powerful. And the payback, roughly 8 years. So the capital cost, we look at it two ways. We look at it on a total project capital basis, $874 million. And then we also look at it at a peak funding basis where some of that early revenue actually takes care of some of the initial capital. So either way you want to look at it, it's either 874 or 617. And most of that actually goes into the underground mining. It's a bulk mechanized underground operation. And again, on a cash cost basis, 640. There's probably another $100 of sustaining capital in there. So let's say all in about 740 per basket ounce versus a $1,400 basket in terms of the spot price for the commodities. This is work from Metals Focus, which they did with some of the data we provided to them. This mine here in yellow is the Mahalaquena open pit mine that Anglo operates, and we think, I know all the companies show their projects in the lowest quartile, so I'm also skeptical, but we do think that given the bulk nature of the project, that it should be somewhere in that low end, the proof is in the pudding, but it certainly has all the characteristics to be able to do that. On the deposit itself, 8 kilometers of strike length. There's actually multiple different complexes that make up the deposit. The one thing that people always were skeptical of was the dip. So it is steeply dipping, but the fact that it's so thick, 40 to 100 meters, you can actually mine on a parent dip, and the dip actually doesn't really, actually helps you in terms of the gravity in the mining method. Because it's so shallow, it's all accessible via ramps as opposed to spending 7 or 10 years sinking a shaft. We took the South Africans to Canada multiple times, and we toured them through a number of long hole operations in Northern Ontario, and it became very obvious that long holing with paste backfill was the preferred method here. And there's a number of advantages, including safety, geotech, the extraction ratio improves, and the productivity improves. So that's the mining method, highly automated, highly mechanized, and again, that's an opportunity, but it's also a risk given that South Africa doesn't have a culture or a history of mining this way. It's a standard plant processing facility, bog standard South African. A lot of people talk about water. We originally were looking at connecting to a pipeline that Ivanhoe was developing, and we found that was actually not economic, and we started looking at borehole underground water as being a source of water supply. And in fact, the combination of borehole, underground water and recycled water from the mine actually gives us 2 megaliters per day of surplus. And the Venetia Diamond Mine, which is just north of this operation, actually uses groundwater as their main source of water. Power, we've got self-built status from Eskom. Everyone says that there's no power in South Africa. There's a lot of power. It's actually the transmission that's the issue. And so we're spending about $80 million of that capital cost is actually on infrastructure. There's just another photo of the surface infrastructure, the current design for it. Last thing I'll talk about is training. There'll be about 1,000 people required to operate this project versus tens of thousands in the conventional mines. We retained NORCAT, which is a Canadian-based training group out of Sudbury, and they've helped us design a plan to recruit and train people from the local community. That's the story. I'm happy to take a question if there's time.
Yeah, we have about a minute or so for Chris.
Yes, sir.
I'm presuming you ship concentrates. How many concentrates will Waterberg produce?
Are you talking about?
Is there a copper concentrate, a nickel concentrate,
Oh, okay, sorry.
rhodium concentrate, a gold concentrate?
Sure. So you'll produce one concentrate from the project, and the other thing I didn't mention is Impala has a right of first refusal on the offtake. So we would ship that concentrate to the Rustenburg smelter, and at that point Impala would then refine the base metals and the precious metals separately once they're separated in the smelting process. And the capacity in South Africa is highly questionable, although Impala has the capacity based on their profile. Thanks, everybody. Thanks so much.
Thank you, Chris.